Okay, Chair, we are live on YouTube now. Over to you.
Thank you very much. So welcome to the virtual meeting of the Audit Committee of Northamptonshire County Council. This is a virtual meeting and is also being broadcast simultaneously on the Council's YouTube channel. My name is Bill Jessup and I'm the Independent Chairman of the Audit Committee. Before we start, some important online housekeeping for everybody present. Please ensure any mobile phones around you are on silent. Please keep your microphone muted and when not speaking, and then unmute to speak. Only one person should speak at any time, and I as chairman will call those to speak and keep an eye on the room through my gallery view on those indicating they wish to speak. So before we move to the agenda, I'd like to do a roll call of the councillors present to confirm attendance. Please indicate you're present when I say your name. Councillor Irving Swift.
Present, and could I send the apology of Councillor Osborne is unwell. Thank you.
Thank you. Councillor Legg.
Present and good morning, Chairman.
Good morning. Councillor McGee.
Present, Chairman.
And Councillor Parker.
Present, Chair. Good morning.
In terms of technical control of the meeting, if any councillor leaves the virtual meeting partway through for a period of time, for example, if connection's lost, I'll continue the meeting unless we're not quorate, which is 3 councillors. If the meeting becomes inquorate, then it will continue as a briefing session for those members still present. No formal decisions or recommendations can or will be taken if the meeting is inquorate. Good, so that's the boilerplate over. So let's move on to the agenda. So we'll record Councillor Osborne's apologies and wish him well. Are there any notifications of requests from members of the public to speak? I guess the answer to that is no. Any declarations of members' interests? No. Good, thank you. So that moves us on to Chairman's announcements. Now, the agenda is wholly focused on internal audit matters, but as we've got Barry Scarr on the line, I'd just like to invite him to give us a couple of minutes to bring us up to date on how the 18-19 accounts are progressing.
Thank you, Chair. And last week we reached the monumental position where the field work for the audit was complete.
Sorry, Barry, we have the same problem as yesterday. You echo, your voice is not good.
Not quite sure where it's coming from, Chair. Is it still echoing? Right, someone's put themselves on mute. So the field work from the audit has finished, and we're now down to partner review and
sorry, yeah.
So queries coming from partner review are coming through the portal. So we expect that will come to an end in the next couple of weeks, and we'll be in a position to bring the revised accounts to audit committee in March as planned. So the team are obviously closely liaising with EY. There has been a change recently. Steve Clark has gone off the scene, and a new senior partner has come along, but that transfer has been seamless. And we are promised by EY, but it will not affect the deadline for 18th of March for audit committee to consider the accounts. Most of the work in the next couple of weeks will be agreeing the schedule of adjustments to restate the accounts arising from the audits. And we're planning to have that complete, like I say, in the next 2 or 3 weeks in time for the papers to come to audit committee for 18th of March.
Thank you very much, Barry. Any questions on that? It seems to be reasonably straightforward. Good, excellent. Thanks, Barry. Now, you're also going to organise for us a briefing a couple of days before the next audit committee so that we can go through the detail of the accounts and ask all the sort of boring questions. So that will just make the audit committee itself a little bit more effective. So obviously it's not a 3-line whip, but if people want to join that briefing, they'll be more than welcome. Thank you for that. Right, so let's move on to the minutes. Sorry, Cecilia, I see your hand. Right, go on.
Yes, sorry, Barry. So you just say that for the signature of the audit, what we need now is just the adjustment of account. So you are satisfied that we will not have any surprises. Now, what do you think the auditor, or can you say, what are their things about the ongoing, and how are they going to do best value and ongoing judgment? Do you think they will be open, or they will leave it in such a way, because now we are talking about 18, 19. So for the unitary, when they close completely the account of NCC, what is your opinion on that? Thank you.
Thank you, Chair, and through you, Chair. I think in terms of the two judgments that we're waiting on, the value for money would be, as was said at full council, because we're inadequate on children's services, then we will not get an unqualified value for money opinion. That's the same for every council that is inadequate on children's services. In terms of a going concern, we've been working very closely with EY and all of the districts as well, because we're trying to get the same wording at district and borough level as at county level for going concern, because obviously it's an issue that affects all 8 councils. And we're at a point now where that wording is almost agreed with EY, and that's been coordinated through district and borough colleagues, as I said. So I'm confident that we can get a agreed statement on going concern.
Okay. Okay, let's move on to the minutes of the previous meetings held on the 17th of December. Any questions or comments on minutes, please?
No, happy to move them, Chair.
Good. So can we take it that the minutes are accepted and approved? Thank you. I'm seeing nods all around for that. So that moves us on to the internal audit plan and progress update. So Duncan, over to you to introduce this item, please.
Thank you, Chair. We regularly report to the committee on progress in delivering the audit plan, pretty much at every meeting. So this is our usual report that summarises our progress towards achieving the 2021 audit plan. At previous meetings, we've previously focused in quite a bit of detail on the changes and flexibility we've had to bring to that original plan that was agreed back in February of 2020, before the pandemic. So those issues continue, but I'm not going to focus in my presentation on all those issues, because it's a common theme throughout the year that we have been very, very flexible. We've had to be very light on effort in relation to the work that we can and cannot do. We've agreed a schedule of work with Barry and Teresa to year end. We've been very, very focused on 2 issues. The work that is necessary to support an evidenced audit opinion. The professional best practice is very clear that that opinion is still required, even throughout a pandemic period. Indeed, it's probably more important to be giving an opinion regarding the adequacy of controls during a period of pandemic than it is in a, quote, normal year. But of course, 2 very big pressures apply throughout this year: the pandemic, as I've mentioned 3 or 4 times already, but also the pressures that arise across the council in delivering the Future North Hants agenda for the 2 new unitaries to go live as at the 1st of April. So they challenge significantly our ability to deliver audit planned work. Indeed, then it may be necessary to overrun some of that work a little bit into April, but I'm being very clear across my teams that I must attempt to minimise any work carried forward into April, because the agenda of our work for the new councils is extremely pressured from day one, where it's going to be necessary to very quickly give assurance, particularly to the 151s, about the go-live implementation of ERP and their financial systems as they take on the management of all of the services. So it's very, very important that we are focused on concluding the necessary work agreed with Barry and Teresa by March the 31st, or very close to that. And our report submitted to you identifies those audits. They are summarised at table 1, paragraph 4.8, in order the work that we need to do in order to complete the plan. We are on target to complete that plan by the end of March as I speak. It's always important for us, you'll notice from that table that the largest number of in progress and not started audits are the key financials. That's pretty normal for us as at February, because the key financials are always Q4 audits, because we're required to audit those systems using transactional testing that cover the entire financial year. So they're always loaded into the back of the financial year, which gives us an extra pressure given the close down issues. We summarize for you at paragraph 4.9, the second table, assignments completed and opinion assigned. We give you, as we normally do, those audit opinions that we are concluding across the piece, including those at draft report stage. So they are subject to change, but we give you that information to show the direction of travel of where our current thinking is. And there are 2 audits at draft report stage, as I report to you, that may produce a limited opinion, a manual spreadsheet interface, which are all of those spreadsheets that feed into ERP and upload into ERP. That may be a limited opinion in respect to the systems of control. And our purchase card audit may be giving a limited opinion regarding compliance with the system, but a satisfactory system being in place. We are, of course, progressing those 2 audits in discussion with the services to bring them to a final report stage and an agreed opinion. We also at 4.10 give a summary of we've not forgotten to follow up on audit recommendations. And our audit work in that area has found that of the 37 recommendations previously agreed that we'd not checked on, 20 have now been found to be implemented. The 17 that are outstanding, we're now moving to a different stage with that, in feeding that information and maintaining that information on behalf of the new councils, where those outstanding actions will not be lost. They will be passed across to the new councils to ensure that they can review the applicability of those actions and agree some timescales around those issues. I will pause at that point, and I think Jacinta's also in the meeting, so Jacinta and I are very happy to answer any questions. Thank you, Chair.
Okay, any questions from Duncan on that report? Obviously, we've got a separate section on risk later on, so if you've got questions on risk, let's just deal with those later, but any questions on the rest of the report? Cecile?
Yes. Do you stop at 4.1 or do we go on 4.2 of your report?
If you've got questions on 4.2, yes, let's take those 2.
Yes. I just, well, as a because Duncan finished at 4.1. My question first on 4.14. Basically, you think that everything is very difficult now to do. So how are you mitigate the risk? Because you say that the audit challenge are unique, unprecedented, and extremely difficult to predict or plan. So what are you proposing to do? And on 4.22, it's for the Children Trust. You are at some distance between the cost and budget and the draft audit plan for 21-22. So what is the distance? And finally, on 4.25, the fraud referral. And you say due to the volume of referral, why do we have much more volume of referral? Can you clear that for me? Thank you. So, I know they're small points, but they're important because they underpin how valid the audit is.
So Duncan, I think you've got 3 questions there. Can I just roll in one of mine as well? Because I think you can deal with it along with the first of Cecile's questions there. In 2.1, you talk about a target to do 95% of the plan. And yet, as you read through the rest of the report, and as you've mentioned, you know, that the original plan's been curtailed here and there, and there are plenty of audits to be started. Of course, actually, we're not really sure what 95% means. Does that mean a specific number of hours, or does it mean 95% of the scope, which is quite difficult to define, or does it in reality mean that actually it's a judgment point for you, and really what you're telling us is actually 95% in reality means that you've got to be confident personally that you've done enough work to give the opinion. So if you can add that into Cecile's question 1 and deal with those 3, that'd be great. Thank you.
Chairman, can I ask a question that Duncan may also want to answer at the same time as he's answering the one you just alluded to? In 4.24, it talks about what's going to be happening in the future. It does actually say March 2012, but it's actually 21, I assume. But it says at the end of the first paragraph that the staff will be employed by West Northamptonshire, the audit staff, I'm assuming. So does that mean then that you will actually be charging North Northamptonshire for the work that's carried out?
That's probably not for us, but as a point of information, I'm happy for Duncan to deal with that.
Okay, thank you.
Thank you, Chair. I always have my pen and my paper next to me as the questions are coming in sequence, so I don't lose track. So if I don't cover any of the answers that people are expecting, please pull me back to them, but I should be able to. To deal with the first question about pressures and a very unprecedented time and difficulty to complete the audit. I think in reality, I'm in a place where I'm constantly discussing, particularly with Barry, to be honest with you, that is an extremely important relationship that we still have until March the 31st, in order to ensure that we are able to give not only enough work that gives me evidence to give an annual audit opinion, but also the statutory responsibility still really sits with Barry as the 151 officer regarding the adequacy of control systems to March the 31st. So that is a constant conversation, and we've been in very close dialogue with Barry about what work is necessary to be done. We've experienced a significant amount of legitimate, I have to say, concern from across the organisation as to their capacity to support the audits. There is always some disruption, however light touch we want to do an audit. There is always some need for that service to engage with us, if only to read and agree the draft report as the minimum point. And of course, the queries we get always need some resource to talk through. So that's been a constant dialogue. I think the new aspect to it is that with the close down of the county, we would normally be chatting to Barry about if we can't do this work in March, can we do this in April? Can we do this in May and cover that period that still supports it? And of course, we can't do that because the county will cease to exist. So there is a list of audits that Barry and I are very clear that we really need to get done, or there will be impacts into the new unitaries. And that's the secondary aspect. I'm also in fairly detailed dialogue with both the West and the North 151 officers that we hope to get this work done. We aim to get this work done, and the findings from that work feed into the assurance that plays into them and the data that is available, the carry forward data from the council that goes through to the new councils for them. Of course, if we don't succeed in getting some of those audits done, there is a risk to the new 151s regarding the systems and data that they will inherit that will ultimately require additional audit work within the new unitaries if we fail to get them done. Now, I highlight the pressures there to be transparent and honest to you as the audit committee, that whilst Barry and I are determined those audits will be completed, we have to highlight the uncertainties that may occur that we can't predict. But at the moment, Barry and I are confident that those audits will be completed. If they don't, we're very clear that there's a knock-on effect into the new councils that will then need to be considered by the new councils. And that is something I flagged up to those. So that is the point of that paragraph within the report, is that we're determined to get them done. We do have a fallback position if we experience some significant problems in achieving those. And ultimately, completing that work gives assurance, or if we find poor controls, gives a transparent report into the new councils as to where their systems of control currently sit as at the end of March. So it is a constant communication with both Barry and the new 151s as to how we both achieve the residual parts of the audit plan and what the knock-on effect is if we fail to fully achieve that. I think that answers the first question. I was also asked about the Children's Trust, that there is some distance between costs and budgets. I think I have to answer. The question was, what is the distance between the costs and the budget? I have to answer that question as I sit here. I don't know. We have presented a draft audit plan to the Children's Trust. We have identified those audits that we feel need to be undertaken, both in respect, there's two work streams there, both in respect of we need to do certain audits because the Children's Trust is now a separate legal entity. So there are certain audits we need to do that provide assurance into the Board of Trustees as a separate legal entity. And there are those audits that we would normally have done for the County Council as part of the service delivery aspect. And we've presented a number of iterations of a draft audit plan to the Children's Trust. It is quite clear that that plan contains quite a few more days audit than I think the Trust might have been expecting. And I think it's fair to say, given that point I make about budgets, that the expectation is a plan of that size may provide a greater cost than they have a budget for, but they have not advised me as to what their budget is. I have set out a plan with a number of days to them. I know I have a cost daily rate that I apply to those days. That is a single daily rate. We call it a blended daily rate. So they don't pay a daily rate depending on if I'm doing the work or Jacinta's doing the work, which is obviously a higher cost. We charge a single daily rate that is blended across the different levels of seniority of audit staff. And I've been trying to have that conversation with them about what is their cost envelope and is this doable, and match that to my professional advice that I'm required to give about what is an adequate level of audit coverage to support the accounts and audit regulation requirements to support both an annual opinion and assurance into the finance director as to the adequacy of theirs. I set that out because the Children's Trust, it is my view, no one's corrected me, that it is an applicable public body covered by the accounts and audit regs. So we are still in discussions with them about bridging that gap. I flag that really as a risk that it's possible we might not bridge that gap. The minimum level of work that I feel is required cannot be afforded, and the Children's Trust may well seek to get alternative audit provision. I hope to bridge that gap with them, and that dialogue continues with them as an attempt to agree that audit plan. I have to say these are fairly usual discussions when you're looking at what is the budget within a separate legal entity to do an audit. We had same sensitivities and tensions before we agreed the Northants Fire Authority audit and the LGSS Law Limited audits that we undertake for them. So I've not lost hope for that, but it is still not agreed. But we are getting down to the brass tacks of what needs to be done, why it needs to be done, and then that has a financial cost that we need to agree. I have to be very clear in my advice to both the new unitary 151s and indeed my boss as an MKC-led authority shared service now, that what we agree to is something we can afford to deliver. And if we can't afford to deliver that audit, we don't do it. That is one of the harsh realities of the judgments I have to make about delivering an audit service. If we're not getting a fee that covers our cost, and it is not a profit margin, I have to stress, it's a cost. But if we're not getting a fee that covers our cost, it is better that we say we can't deliver that audit than try and deliver something that does not give me adequate evidence to support the professional opinion required. I've seen a couple of the images on my screen that suggest some follow-up questions might want to come in before I move on to the other 3 questions I was asked.
Duncan, can I just ask you one before anybody else who gets in here? So I think this discussion you're having with the Children's Trust relates to a plan which is for more than a year. And so to the extent it's after 1st of April, it's the new unitaries as opposed to this particular committee that needs to be worrying about it. However, there is a small period of time where we should be interested because the trust is working on behalf of the existing NCC. So I imagine at the minute, and maybe you just confirm this, you're not doing any audit work specifically on the activities of the trust, other than audits that you're already carrying out. And so could you just confirm that if that's the case and you do nothing on the Children's Trust for the period between its inception and the end of March, that has no implication for you in terms of giving any opinion you might be required to give in respect of NCC specifically?
It doesn't have an implication to give an opinion on NCC because, of course, part of the year's work has covered some children's services issued pre-Children's Trust. We're not doing work between the inception of the trust to March the 31st because we've not agreed a service delivery model with them. If we are commissioned as at the 1st of April, the intention would be that that first year's plan would include some testing samples from the first 6 months worth of operation. So for example, if we were looking at accounts receivable, debt management, those kind of things in the first year from April the 1st to March the 31st, 2022, within our testing sample, we would expect to use some testing from the first 6 months worth of transactions to give some coverage to that period. That's in essence what we did for the Fire Authority, ultimately. It was the same thing that when we eventually agreed we started work in their first full year, but we included our testing in their first partial years to give them assurance over that period. That has, dare I say, not a minimal effect, but it has a low effect on the resources required. And often I wouldn't say with a smile on my face, but I'm often comfortable to draw that resource if we've got a good plan agreed as a full year plan. So it doesn't affect the NCC opinion, I don't think, to March the 31st. I think it might, if I fail to agree and the trust does not have an audit regime in place. That may feature in my commentary into the new councils that they've got a children's trust without an audit regime. But I'm still hopeful that we will arrive at agreement ultimately before the 1st of April and be able to accommodate that first 6 months, first 5 or 6 months of their operations within that first year's plan.
Okay, thank you. Cecile, you've got a question?
Yes, and I don't know if you can answer, Duncan, because you say that it's a question of price. So do you know if the trust want to retain you for continuity, or can you tell us if you think how much are your price, if it's not sensitive because you have the competition, and do you think what is your day rate, and do you think it would be competitive because I'm sure the trust might want to go to tender for the audit, or that is not a possibility? Because for us, if we go at unitary, that is important, that we have a good audit of the trust, because it will be on the 2 unitary later on. Everything that the trust does, if it's not well done and it has financially consequence, we will be into trouble to deliver the budget. So can you please answer my question? Do you think you will have, it will go for tender? And if it's tender, do you think you are competitive? And can you tell us roughly your daily rate? Thank you.
I'm not really able to say the daily rate because we have two financial structures as a shared service. As a shared service, we have partners. So it's a joint ownership of the shared service. Those current partners are the county, Cambridgeshire and Milton Keynes. From April the 1st, it will be West, North, Milton Keynes and Cambridgeshire. Costs associated with audit plans for the partners are absolutely at cost. So I'm very transparent across all the partners with the budgeted costs and indeed the income streams that we have within the service. If you're not a partner, I won't say it's a commercial arrangement because it's not. It's a public sector shared service. But dare I say there is a risk premium onto our daily rate because we are employing the staff. We have the legal liability to deliver the service, and indeed the clients that opt not to be a partner don't want any of that involvement. They want to be able to say to me, I am paying for X many days worth of audit, I demand my days, or I don't pay you. So there's a bit of a risk premium that we apply to our daily rate, and that is a negotiation with each of those clients. Now that negotiation is absolutely transparent with all the partners who are councils. So you can think that the two new unitaries will want a good audit service into the Children's Trust, and will certainly not want to quote profit from that audit service. So there isn't a profit element, but there is an absolute need for me to demonstrate into the partners that I am at least covering my costs of delivering that audit service. And it's in the new unitary's interest that both I'm covering my cost and the scope of that audit work is sufficient that the new unitaries can rely on the fact the trust has got an effective and robust audit service covering exactly what it needs to cover. And that's where I'm transparent about the audit plan. I set that out. It is open to challenge. If the unitary councils felt I was, quote, over auditing the trust, they're more than entitled to challenge those items. There's some movement in that plan in the sense of if the trust is using, for example, the accounts payable system of the new unitaries, ERP, to pay all its bills identically to the new unitaries, I audit that for the new unitaries, and that audit is not necessary within the trust. If I take a different example, payroll, I'm currently of the view that I need to audit that separately. I can audit the payroll controls as part of the payroll audit across all of the users of ERP. But what I can't audit are the additional controls that the trust should have in place regards safer recruitment, particularly sensitive area for a children's services delivery, that safer recruitment. So I've got to have a sample of Children's Trust payroll entries that I can verify the safer recruitment controls are operating robustly and report that into the trust separately. So it's that kind of detail that I negotiate within the plan that gives a number of days total at the bottom where we can then talk about cost. And of course, the new unitaries are a safeguard for the trust that they're not going to be overcharged. It's not a haggle. Without giving you the numbers, yes, I am aware of framework agreements. I'm aware of the commercial agreements that some of the boroughs and districts have been doing across the county. And I'm able to say, yes, I am very competitive in my daily rate. I compare favorably with those externally procured services.
Barry, I think you just wanted to make a quick comment and then we probably should move on to the other questions that were raised.
Yes, please, Chair. I feel the need to step in before this issue runs away with itself. Just to remind members that we set the contract price for the Children's Trust in November with a transitional period for support services in particular, but we are directed by DfE to provide support services for the Trust, and that is set out in the Memorandum of Understanding agreed by Cabinet last year. So I can give you 100% guarantee that an internal audit service will be in place for the Children's Trust for next year, because we are mandated to do so by DfE. In terms of a price, clearly the contract price is paid for by the council, so whatever adjustments need to be made will have to be made as part of the council's budget, and that will be passed through the trust. But just to give members a certainty that that service will be in place by 1st of April.
Okay, thanks, Barry. So according to my notes here, Duncan, you've got a couple of things to answer. One was a question on the level of fraud referrals, and the other was bills accounting point in relation to how the cost will get from one council to another.
Yes, and I think you also asked me, Chair, about the target of 95% achievement of the plan. I got on my note. Fraud referrals first, quick answer. We are seeing interesting levels of referrals coming through. That's consistent across the public sector. From my experience, I don't know whether it's directly linked to the pandemic or things, but we are seeing a consistent level of referrals that we are dealing with as within the report. There's no real trend, no particular challenge, no particular fraud. I think cybersecurity is something I would flag up that under some of those areas, we have seen the national advice appearing that councils and public bodies are being subjected to some particular challenges around frauds through cybersecurity attacks. Some of the well publicized instances have been around denial of service attacks that have come in at a particularly difficult time for public bodies to manage, but nothing really beyond the normal type and frequency of those frauds that are dealt with. Another particular angle just is the new business we've been doing, not necessarily as a county, but across some of the boroughs and districts. We've seen a lot of the business grant work coming through, furlough work coming through, that of course, as a new finance stream for people to apply for, is always subject to a level of fraud that we have seen. Hopefully that answers that question. In respect of the 95% of the plan, what we're doing here, Chair, is we don't want to hide behind anything. We are highlighting that at the beginning of the year, we had a 95% target to complete the plan. Originally, that is the number of audits. Where we vary the plan with your agreement, that 95% does vary on occasion. So if we had 100 audits to complete at the beginning of the year, we're expected to complete 95 of them. If during the year we take one or two of those audits away, the 95% is applied to the residual number of audits on the basis that we've only varied the plan because of need. So we try and accommodate the fact that if we've dropped 2 audits, it's because other audits within the plan are taking longer because they need greater attention, etc. What we are reporting now is, in essence, I think, that the target is, I don't want to say meaningless, because we're still reporting it so that that benchmark still exists. But all of the additional work we've been doing throughout the year, where we can, we've tracked that into an audit that we think we can say we've completed. So we've been looking throughout the year at a lot of the ERP financial transactions that we would say we've done a lot of testing during the year that allows us to give a conclusion around the creditor system, what we have ordered and what we have paid. So in those respects, we might not have done a traditional creditors audit, but we've done enough testing in order to draw a conclusion to feed into the annual opinion around the creditors controls that have applied during the year. So as a target, 95% of the planned audits, it's not really relevant. We keep it in there and we give you the narrative as to what have we been doing throughout the year in order to support an annual opinion, so that we don't try and dodge the fact that actually that was the target at the beginning of the year. And the narrative in our update reports, and indeed the annual report I'll be given, will try and explain how, whilst we've not maybe ticked off each of those audits as the beginning of the year, explains the work we have actually done, that we have been fully occupied in a very different way to still support those assurances. I just felt that if we didn't report that as a target, I might be accused of trying to hide the fact that that was a target at the beginning of the year, rather than explain why it's not really relevant at year end. The last question asked about the charging mechanism. That is still being discussed with both Martin Henry, the 151 of the West, and Janice Gotts, the 151 for the North. In essence, I think you are absolutely right, Councillor. In essence, it will be a bit of a fixed fee arrangement. But NCC, as I understand it, is sitting as a partner in the shared service. So it's not the same as just quoting a fixed fee and that being paid. They are still involved in the shared service as a partner in the service. So there is still some agreement to understand. They are very keen to look at their budgets, both individually within the North and individually within the West, to ensure the service as set out is within their budget. They have a draft structure proposed to them, which we've agreed in principle yesterday, actually, that is recommended to them and fits within their budget envelope for all of the inherited budgets across all the boroughs, districts and the county for internal audit. So that's a good assurance we've given them. And we are in the process of talking in detail with them around their annual plan. Now, that's a difficult conversation. The proposed structure for them that is within their budget deals very clearly with an audit service of what would be considered to be a stable ongoing council. And that is designed to give them the assurance that they are getting the same level of audit coverage as all of the county and the districts were receiving in this financial year. And it gives us that baseline to then consider what might be the unique challenges to an audit delivery for 21-22 as respects a new unitary or two new unitaries appearing that have not consolidated a lot of their services, that are running separate services in the first year at least, so that we can identify what those first year unique audit challenges are and whether they represent sufficient risk to merit additional cost to deliver those audits whilst they are consolidating those services. And that first year's plan is still being discussed with the 151s as to what we need to audit and what brings an extra pressure to the first year of audit and what that charging implication might look like. It is certainly, again, not an attempt to bill extra. It is supposed to be a transparent process that reconciles the existing service to the existing budgets and then provides a mechanism to transparently discuss what those unique first year or two pressures might be for the new unitaries and what additional costs might arise from those, given they are going live on that safe and legal basis. And hopefully that answers all of the questions that I've got on my list.
Cecilia, you're still showing a little yellow hand. Are you still have another question for Duncan?
Well, yes, but it's maybe minutiae. When at 4.26, a closed case, I do not understand what you say that the first page somewhere rejected and refer on to parking. So I don't know what that means. Do you mean you park them and it doesn't matter? And 8 require further investigation. But when I look at your closed case and after at your open case, for example, adult social care, finance debt recovery matter, you gave advice on 4 matters to assist recovery debt. And you haven't recorded a financial outcome. Well, that should have been recorded because if you assist of recovery of debt, if you have recorded the debt, it should be a positive outcome. And on your open case, can we have, because it's a direct payment and one is with the NRPF, are we getting better targeting those and have good resolution? And finally, it's a small thing, but I think it's important. On your first closed case, it's a stealing of money, and you close the case because you don't have enough evidence. But I think it's quite dangerous, and I don't know how you can address that, because I do think that when you have a burglar somewhere in the it is not good for the image of our officers. So what do? You say closed case, but you didn't find the culprit. So what have you put in place, or what have you suggested? Thank you.
Duncan?
Okay, thank you, Chair. In respect to the first point about 10 were rejected and referred on to parking, those are issues that come through our fraud referral process. And what we conclude, perhaps rejected is not the appropriate word, what we conclude is that those matters are best approached through the relevant service, in this case parking, probably through an enforcement process, rather than pursued through a fraud investigation. So we often get referrals of that nature that are better progressed through the service, and the service enforcing its regulatory regime rather than through a fraud mechanism. So in respect of parking, we often get, for example, and I don't know, I can certainly get more details around this, but I don't know which matters they refer to as I sit here. But if it's a blue badge issue, some of those are absolutely fraud investigations if we feel a blue badge is being used by a person who is not entitled to use that badge, and that can be a different individual. If that referral is around the eligibility of a blue badge holder, that is not necessarily suitable for a fraud investigation. That is more appropriate to be assessed through the blue badge assessment mechanism, because eligibility is not necessarily a fraudulent issue. So it's those kind of issues that we refer back to the service to say it's better for you to progress that through your powers than this is really a fraud with a capital F type issue. You mentioned about the cash theft. Yes, I would absolutely say that's not a good report, that we have not identified the culprit. That is the reality of some of our fraud investigations. We've looked at it. We've investigated it. We've been quite public in how we've investigated that to try and exhibit a deterrent effect that such things are treated seriously. So that investigation has been quite visible. But sometimes it's the reality of this area. You can't find the culprit. And what we're doing here is to identify that we've looked seriously at it. Every referral around cash thefts is looked at robustly, but sometimes we can't identify the culprit. That's just the reality of where we are. In respect of the adult social care finance debt recovery matters, we've not given a financial outcome there because, as I understand it, whilst we've given advice to assist in the recovery of those debts, again, doesn't really fall within a fraud remit, but we have given some advice and supported in those areas. But as I understand it, those debts have not yet been recovered, so we don't put a financial success against those as yet. They are ongoing in their recovery. And we quote about the no recourse to public funds issue as the last part of the question. I think we are getting better as a council in looking at those issues. We're certainly seeing better engagement across my fraud team with the service that manages that, where we are being far more joined up in our assessment of those applications through a fraud filter as well. And it's very important that we approach those on the basis of we don't label the applicants as potential frauds, but we do look at the applications with some fraud expertise, and that gives us a far stronger gatekeeping role within that mechanism, sitting alongside social services people who are managing that area, as opposed to sitting at the back end of the system and just investigating them when they're referred to us. So I think that is an illustration over the past 12 months where we have improved that area of control within that service that the fraud team works very closely with. I think that covered all the questions on that, Chair.
Good. So I think we've given that report a pretty good review. Just finally, any other questions for Duncan on the progress report? Okay, so next month, Duncan, obviously the main focus of the meeting is all going to be about external audit, but I think we need to give you a small slot because you've got certainly a couple of limited opinion audits to talk about. And also I see, and we know that you're doing some work on the financial management improvement plan and how well that's embedded. Now, I think as the commissioners specifically asked us to monitor the progress of that project, I think, although I'm fully expecting a glowing report, just to tie that one up, I think we should also see that report as well, please. So are we all happy to note Duncan's progress report? Good. Okay, that's noted. So let's move on to the annual governance statement 2019-20. And Duncan, I guess this is over to you again to introduce.
Thank you, Chair. Whenever I introduce an annual governance statement, I always make the point that whilst I introduce it, because as the Chief Internal Auditor, we play a central part in coordinating the drafting of this document, it is really important to understand this is not an audit document. This is a document that the Council owns and endorses. And that is illustrated by the very first introduction page where we set out the context, which is signed off by the Chief Executive and the Leader of the Council. So this document is absolutely a County Council document. It's not an audit opinion. It's not the Chief Internal Auditor's annual governance statement. It is something that we facilitate for the Council because we've often got those sources of information and can coordinate that. So it's a council document. Now, this is the annual governance statement in effect for 1920 financial year. The annual governance statement is always a draft document until the audited accounts are agreed and issued alongside, and the AGS is issued alongside the statement of accounts. So it's quite an unusual process that whilst it focuses on a particular financial year, the requirement around the annual governance statement is that it also includes any significant issues that occur after that end date. So it includes text for significant events after the 31st of March 2020. The document, albeit draft, has been reviewed and agreed with the leadership team and indeed the commissioners. So it's gone through a review process to be drafted and owned across the organisation. So conscious of those two things, of course, it's worth repeating a little bit of history. The first pandemic lockdown came in March 2020. So the majority of that financial year was operating normally. And then the pandemic hit us at the end of the 1920 financial year. However, as I've said, the annual governance statement is required to reflect post-year-end events. So you will see in the annual governance statement, it includes text and a summary that outlines the impact of the pandemic on governance systems. That's sometimes a little bit difficult to get our heads around, that this runs up until 31st of March 2020, but actually there's a decent amount of text in here that is talking around the impact of the pandemic. The annual governance statement also includes my annual opinion, where I conclude for this financial year that the evidence we have audited for 1920 supports the conclusion that the control environment was satisfactory during the year. And I think in the context of the historical financial challenges for the county, and indeed from March onwards, the impact of the pandemic, I feel that's a pretty substantial achievement for the council to arrive at that. Sometimes when I give a quote satisfactory opinion, people are a little bit disappointed that I'm being a bit guarded around that. But I think in this instance, a satisfactory opinion reflects some of the significant progress the county has made over the past couple of years with some very, very serious challenges. There's still a lot to be done for those control systems to move towards a good category. But when you think about where the council was and where it has come from, I think a satisfactory audit opinion is a pretty good achievement. Since the publication of the annual governance statement, I would acknowledge that we had 2 or 3 queries come in from the external auditors regarding it. Those queries have been answered, and I don't believe they alter the content of the document that you've got in front of you. So for an example, they queried, is the document current or and reflecting the last 10, 11 months worth of significant issues? And of course, we've pointed them to the fact it does. They asked for us to focus on a conclusion within it, and we have pointed them to that statement at the very beginning of the annual governance statement, signed off by Teresa and the leader, that identifies the conclusion elements. So we feel we've engaged with the external auditor and answered those queries for the version that you see before you today. I'll pause at that point. I think I do just need to say for some of these questions, I might not be able to give you the answers because you might be asking me about aspects of the AGS that are not mine to answer, but I will, and I'm sure Barry will try to answer anything if you've got any questions around this. Thank you, Chair.
So just before we go to the questions, if there are any, Barry, is there anything that you would want to add at this point?
I think we've got to recognise the period of time that the AGS covers, and that the AGS at Northamptonshire in particular is never an easy document to draft up because of its history. Although it's moved on since the 1819 AGS. I would say that Teresa, the leader, and commissioners have been through the document. There have been numerous changes and versions and revisions to this. And whilst it's difficult to sometimes keep up to date with the changes at Northamptonshire, I think this reflects the current position quite adequately.
Thanks. Any questions on the document?
Just a couple of not questions, just comments on errors within the report. On page 60, developing capacity, it talks about the Northampton local government reform, but of course it's the Northamptonshire local government reform. And then on page 61, it's got the 2019-20 significant governance issues, and under A, it talks about Northampton County Council. Well, it is the Northamptonshire County Council, so I'm surprised those points haven't been picked up. That was all, Chairman.
Okay, thank you. Cecile, you've got a question?
Yes, as usual, we are there to represent our constituent, and I know they are difficult documents, but I still think they are quite obscured. And I would like, if it's not, to make it more readable for a lay member, because it's very easy, and I get frustrated. So if I get frustrated, the public might even get more frustrated than I am. I think I am of average intelligence, but frankly, I lost the will to live when I read them. So you can say something very important and we miss it. When you say too many things, we don't see the forest from the tree or the tree from the forest. So I would say that I will have a plea for the future, something very simple. And for example, I will, in your things, in page 63, it's about, there has been an intention within the council to move to a number of federated body. This model has now been abandoned by the council. So that is said, and that is quite major. So it's put in there, and we think, oh, why? Why not? What was right? What was wrong? So it's, for me, I have a plea. It's to make it simpler and much more approachable, and of good quality. Doesn't matter, but I think it's too complex and sometimes not very well explained, but that is maybe me. So I have a plea for the next unitary to have something more readable. Thank you.
Okay, well, I'm sure that would be appropriately noted in the minutes. John, you've got a question.
Yeah, Chair, I'm not sure if it's an appropriate question or not, but I agree with Cecile. It's not easy reading, even for a councillor that's been involved as long as I have. This is not easy reading. But on page 63, it says about the intention within the council was to move to a number of federated bodies, and that model was dropped. It doesn't mention, unfortunately, in there the cost of all that, and that was quite significant, unfortunately. And the risk registers at the time did not highlight that risk, because it was a huge risk, and it was an absolute disaster, the funds spent on that. And it would have been better if it was made clearer in here of why it was changed.
Okay, thank you. Any other questions I have? Stephen, have you got a question?
Yes. If I could just ask a quick question, Chairman. The governance report that we're just looking at is apparently up to the end of the year 20. Will there be one done for the last year of the operation of the council, or is this the last statement we'll see?
Duncan, would you like to answer that?
Yeah, thank you, Chair. Yes, this is not the the last version that will be issued. I'm choosing my words very carefully. This will be the last version this committee sees, because we will not have the 2021 AGS ready for your March meeting for obvious reasons. There is a process we are going through with the new unitaries, and I understand, or my understanding is the West Unitary has been designated as the inheritor of all of the 2021 closure of accounts and annual governance statement processes, as those are drafted to March 21. So there will be another version of an annual governance statement in respect to the County Council issued. There will be another annual internal audit report that I must draft to the 31st of March 2021. And those will go through a process that I understand is being led by the West Unitary to consider not just the County Councils last year of accounts and AGS, but also the boroughs and districts as well. So this is the last version you will see, but another version for the current financial year needs to be drafted to meet statutory requirements.
Thank you.
So I've just got a couple of questions. One maybe is actually for Barry. I note in here that it says the KPMG audit letter is still outstanding, which I must admit I either wasn't aware of or had forgotten. So if you could just confirm that and just tell us what the delay is. And then maybe one for Duncan more generally, which might partially answer John's question. Appendix A is, I'd be just interested if you could just give us 2 minutes on how Appendix A is generated, how people choose which items go in and which don't, and you know, is this a standard format that you would tend to see in other councils, or is this just one that Northamptonshire has used for a while? So Barry, would you like to just deal with the KPMG point first, please?
Yeah, Chair. Sorry, Chair, I thought I picked it up on the drafting. We have received the order letter, so that needs to be deleted from the draft.
I must admit, I thought that we had, so I'm pleased that my memory is still okay.
I think just picking up on a few other issues that councillors have raised, the AGS is a difficult document and it is fairly prescribed. There is a framework that we adhere to in constructing that document, so we have limited leeway as to how we can change it. And in answer to Councillor McGee's question, it's not a financial report per se, it's a report that covers risk and governance. I think some of the issues around the federated model in particular have been well covered in other reports, which led to the government intervention, and the costs were laid out in there. I think in terms of Appendix A, most councils will include an action plan on items of significant concern, and as usual with audit and risk, it is a subjective judgment as to those items. So, you know, we would sit down with the Chief Exec for Leader, myself, Duncan, and the management team, and define those items of significant risk and put them into that table and that action plan, as I have done at other councils as well.
Thank you. Any other questions on this report? Good. So are we all happy to note this report?
Yes, yeah.
Good, thank you very much. So let's now move on to the risk rating report that we have. And again, back to you, Duncan.
Thank you, Chair. I just had a little trouble taking myself off mute then. So at the last meeting, the committee took the risk register and had a number of queries around it and requested that we bring an updated version and a bit more commentary around each of the risks, which is what we've tried to do with this paper for this meeting. So the risk register is again appended, and the covering report tries to give a summary of the individual risks, their scores, and their updates. So we try and take each of them in turn in the covering report and talk through why that risk is documented as that is it up to date, has it been regularly reviewed, etc. Overwhelmingly, the key themes are that I would report to you that risk register has been regularly reviewed by NLT. Indeed, I've attended those meetings and supported directors in reviewing, and indeed prompted those directors to keep the risks. up to date. I think a particular nuance around the risk register is the migration into the new unitaries. That, yes, absolutely, some of the issues recorded within the risk registers, those risks are reducing, but quite rightly, in my view, those issues are retained within the risk register as a matter of record, very similar to the action tracker mentality ethos that we're bringing forward. That what we want is a risk register, that a strategic risk register that reflects the issues NCC has been managing throughout its final 6 to 12 months, so that that information can feed into the new unitaries as a matter of record. Even to the extent of if that risk is reducing, for example, the very first risk that finances are not sustainable, that the measures that have been put in place and operated throughout the year are recorded, and that information and that position is then visible to the new unitaries, that is how the county has managed that risk throughout the year. And I think previously on occasions the committee has mentioned that it was surprised it wasn't seeing that some of these risks have been removed from the register. And actually, the conscious choice was taken that we keep that information in the risk register, so it's a matter of record when we pass it across to the new unitaries. And indeed, also where the current risk is in excess of the risk appetite, so there is work to be done to continue to manage those risks, that is also visible to the new unitaries as we move towards March the 31st, that gap still exists, so that the new unitaries can take a view, again, within a revised risk register for them, as to what, if any, action they still want to see undertaken, if they want to pass forward the agreed actions from the county's risk register, or indeed those in the boroughs and districts, or indeed whether they want to take a fresh approach. I think it's important that we also report that the county was intending and acting on managing some of these risks, so it's very transparent into the new unitaries from that information. So paragraph 4.4, I go through each of those individual risks and give a précis in respect of why some of that information is still there, what those issues are. So if I pick on one at random, at 443, the statutory duties including safeguarding, what we're saying here, that the residual risk of 16 is more than the risk appetite, and the agreed actions are still to be implemented by March the 31st. So that is still a matter of record to show that those risks are live, continue to be managed, and actions need to be taken to continue that direction of travel. But we also identify that some of those risk factors appear to diminish to March the 31st, e.g. an increase in the number of complaints. And the argument might be put forward that the county will hand across a complaints register as such, a list of complaints for the new unitaries to deal with. But it's important to remember that in managing complaints, the county has continued to focus on that. It has not taken the view that it will be a matter for the new unitaries to resolve. It has continued to apply a robust approach around complaints, and what we want to do is transparently identify those actions for the new unitaries, and as at March the 31st, whether or not they've been implemented and dealt with, and what the handover looks like for those issues into the new unitaries. So I'm hoping that gives a flavour without me actually going into the detail of each risk, which I'm sure I might get some questions around each of those. And again, I might need to take some of those questions away and get the answers on this particular paper, because of course I don't own the individual risks, but I will attempt to answer any questions the committee may have on that. Thank you, Chair.
Cecile, would you like to start us off, please? Oh, you're on mute.
Sorry, we get very excited about risk here. When I look at your risk register, 5 remain the same, 4 have increased, and the Children Trust is there. So what I worried is, as I said, I find the risk register which is now up to 11 risks. I find it. But for example, two things. You have the council finance are not sustainable, so it's very good. The risk went down to 10. But after we have the breakdown of governance, but also the inability to attract or retain staff with the right skill. And that has an immense potential for the unitary and even for us. Now, in one of the questions was asked at full council, there was a report to say we have a lot of vacancy. So if we have a lot of vacancy, that has made the finance more sustainable in a short term, not in a long term. So what can I do with that register? Because in a nutshell, 5 risks are of the same, nothing has moved. So no mitigation, nothing, and 4 have increased, and the only one who has decreased is the risk one, the finance are not sustainable. So how can what are the lessons we should have and what we should do next time better for those risks, not to increase? If you have a rich register, the main purpose is to manage the risk and not to increase it. Thank you.
Duncan, you want to comment on that, please?
I think I'd agree with a lot of those comments. I think my response to that would be in 2 parts. I think, dare I use a phrase, the risk register is what it is. It is the recognition and assessment by the key leads of what those significant issues are that are being managed. I don't think the risk register in itself in moving is a bad thing, because it's reflecting a changeable level of risk. I don't think the scores remaining the same necessarily, or indeed the content remaining the same, is necessarily a problem either, because if the risk owner goes in and reviews it and says, well, pretty much nothing's changed, we're still managing that level of risk. I think the process of risk management is illustrated in the detail, showing how triggers, likelihood factors and consequences are assessed. The adequacy of controls are listed, and then action plans are evident. As long as those action plans are still seeking to address the key issues arising, what the risk register is showing to you is a window into how the risk owner is managing that risk. I always advise audit committees to avoid dipping in and into the detail too much and querying the detail, because this is the risk assessment by the risk owner. It's not for me. I don't think it's for the committee to necessarily replace our view of a risk and replace the risk owner's assessment of that. If, of course, there's a significant issue we feel has been missed, from my perspective, I particularly pay attention to, if you take the statutory duties risk number 3, particularly safeguarding, if the current score as it's listed is 16 and the target score is 9, I am looking for a range of actions that the risk owner has identified within a reasonable period that I can understand seeks to reduce the risk score when implemented. And I see that in this risk. In this instance, I'm not auditing that as to is that accurate. In this instance, I'm looking at that through the filter of, does that range of actions reassure me that action is being taken to reduce those threats that have been identified? And as I read those, I felt they do. I think the target dates around those being the 31st of March, they can't be any longer than that, of course. So there is a substantial challenge there for that area. But again, coming back to the new unitaries and the closure issue, I think it's important that those controls are reported as is, good, bad, and indifferent. And I think those action plans are also necessary to be reported and will be rolled forward into the unitaries. And ultimately, because the target date's the 31st of March, one of the things the unitaries will face, not just for the county's risk register, is to get some assurance around, were those actions successfully implemented or not? Are they outstanding? And do the unitaries feel that they then need to do anything? So that thought process, I think, provides assurance that there is an appropriate grip, for want of a word, on each of these risks as the risk owner has reviewed it and proposed how they are managing those risks. I think if the audit committee feel that something significant has been missed from that process, then that is something we can take back to the risk owner to have that conversation with them.
So
Thank you,
we've
Chair.
got Stephen and John with questions to come, but Barry, I think you just wanted to add something to what Duncan's just said.
Thank you, Chair. And it gets back to what I said before, the going concern concept. And the reason that we're certifying ourselves as a going concern is our statutory responsibilities are transferring to the new unitaries. And the risks associated with those statutory responsibilities still exist. So whilst the county council aspect of it will disappear, those risks will be picked up by the two new unitary councils, which is why they haven't been written down or written out, because the probability and the impact still exists and will be transferred over.
Thank you. Stephen, you had a question?
Yes, thank you, Chairman. You said that the risk registers are going to be passed on to the two new unitary authorities. And so could we have a situation where the West and North have a different approach to those risk registers going forward, and therefore making different decisions about the level of risk? And as the sort of internal auditor still stays the same, are you going to be faced with a situation of advising on different levels of risk for the same risk register that existed a few months before?
So Barry, do you want to just deal with that to start with, and ask Duncan if he wants to add anything?
I think it's down to the two new unitaries as to how they construct their risk registers, but just to remind members that their risk registers will look very different to ours, because they will have services like refuse collection, housing and revenues and benefits in the mix, whereas at the moment that we don't. So I expect they will look very different, but it's down to their judgment and how they want to assess their risk. We can't have any say in that. And I suspect that there will be minor differences, but the risk management is a fairly prescribed procedure, and I'm confident that the two new unitaries will manage it.
Duncan, anything to add?
Yes, I think I'd absolutely support what Barry said, that I think the risk management process, best practice rather than what we apply, the best practice is fairly prescribed. You need likelihood and consequence factors. You've got to score it in some way. You've got to compare those issues. So I think the format will probably look very similar for the new unitaries, and the thought process will be very similar. But Barry's absolutely right that those judgments will be for the new unitaries to make. And yes, absolutely, they may take a different approach to risk. Now, if I give you an example of that, and I am not talking from any insider knowledge that this is a different approach being taken, but certainly within the county's risk register, the implementation of the Children's Trust has appeared very much front and centre as creating the Children's Trust and handing across those services. The new unitaries may take a view that the Children's Trust doesn't need to appear on their strategic risk register, because in effect it's a contract to be managed. So it might not appear on their strategic risk register in that way. And I only give that as an example as to illustrate, I think, that different judgments are made. Barry's absolutely right. Again, they will have different services. The pressure on homelessness is a particular issue that impacts on boroughs and districts that the county hasn't really seen. So they will form those judgments, and it's absolutely right and proper that they form those judgments, construct their risk register, and that risk register is subject to the same transparency and scrutiny through their audit committees to give assurance that they are exercising that judgment and acting where they need to reduce those risks and manage those risks. Thank you, Chair.
Actually, that's just introduced the topic that I was just to ask you about, which is actually Directorate risk registers, because this paper specifically deals with a corporate risk. Now, in an ordinary year, I think we would have spent more time looking at Directorate risk. On an exception basis, we might have done one Directorate at one meeting and then another Directorate at the other. So we've seen less about Directorate risk than we would normally do. I know that that you've made comment before that Grace isn't being used quite as much as you would have liked because of the COVID challenges and so on and so forth. But could you just give us some comment on how you feel Directorate risk is going and whether you're happy that the council's dealing with risk at that level adequately?
I think unusually for me, I would say I don't think I can give a formal opinion on how well those risks are being managed. I think I've got to defer to my audit approach in respect of that issue. I'm not aware of any significant issues that will change my audit opinion for this financial year. That's drawn from a lot of complicated testing and assessment around how services have been managing through the pandemic and the Future Northants close down process this financial year. So I'm certainly not thinking there is any warning signs appearing that significant risks are being missed by services. But I've got to take my time and go back and review my year's work before I formally conclude that. We took a very, very conscious decision when the pandemic came in that we would allow services to manage those pressures and manage those risks without chasing them as to have they done an assessment within Grace. We see some people using risk management and updating those issues. We see some other service risks that in Grace have not been updated since the pandemic came in. But again, we took a very conscious decision corporately that the priority has to be for services to continue to deliver where they need to, rather than the risk management process distract them from that. Not ideal, but I think I conclude absolutely necessary. The last thing I'd want is for a service to fail to meet those pressures because they're required to do a quarterly risk assessment or something. So I think in that respect, it was absolutely the right thing to do. Very consistent with my understanding of what other councils have done across the same period. They've kept an eye on their strategic risks. They've constantly revisited those, but they have relaxed their directorate or service-based risk recording because I think it's important to recognise those services have been dealing with risk on a daily basis in a very changeable environment. So I don't think the more administrative ways we look at risk when things are normal would have worked. When services have had to be extremely changeable and managing things, perhaps even not on a daily basis, but on an hourly basis. Link that into the Future Northants and the unitary process. And my discussions with those have indicated that I think I agree with them, that if we attempted to document all of the directorate risks across the county and the boroughs, we would effectively set ourselves up to fail in drafting and thinking about the key risks. We would be swamped with too much information. It's been illustrated by our work towards consolidating risk registers for the new councils. At a strategic level, there's an awful lot of information to deal with. Those individual councils take a very, very different approach to their risks and their judgments about those risks. So pulling those together into a first draft risk register is work that's in progress and is very, very complicated. You multiply that by a significant factor when you're doing that on service and directorate risks. So the new unitary's direction of travel, as I understand it, is to focus on those strategic risks initially, to give some time for those strategic risks to go through a number of iterations, including through their audit committees and through their executive processes. And when we feel there is a good acceptance that those have been judged appropriately, then some resource will be pushed to identify those key directorate risks. But I think that's a sequential process that is the direction of travel, rather than attempting to do that in April, May or June. I'd say even in the first 6 to 9 months of the authority, they'll have their hands full with other things. And towards the second half of the year, they'll be in a position to start thinking about what the top service-based risks truly mean, and rightly guided by an agreed consolidated version of their strategic risk register and organizational priorities. I think that comes after rather than on day one. I hope that answers your question, Chair.
Yeah, that's fine. Thank you. John, you've got a question?
I did, and Duncan mainly answered it earlier, Chair, so I put my hand back down. But I don't want to throw the baby out with the bathwater. There's a lot of work went into the risk registers and the mitigations for that. I just want assurance from Barry and Duncan that we are talking to the two unitaries to ensure that these mitigations, if they're not done before present day, are passed over. And how are we assured as councillors that that will happen?
If I failed that, I'll go on, Barry, if you want to.
So I mean, I can just use my personal experience of managing risk in my directorate, and one of which is around staffing and the use of interim staff and difficulty attracting staff. Worked very closely with Martin and Janice about transferring that risk over. Which interim staff do we keep? How do we fill key vacancies in areas like Treasury and dedicated schools grant? So it's about, as I said before, recognising that going concern concept and liaising with your new colleagues in West and North and making sure that the management and the mitigation of that risk is carried over. I would just add, Chair, in terms of risk management, one bit that we haven't discussed, but which is very robust in this organisation, is project and programme risk. And given the level of programmes that we're carrying out, if you think of what we've done in the past year, repatriating LGSS, setting up a Children's Trust and all the Future North Hands programme, I can give 100% assurance that each of those programmes have robust risk registers and they're managed by the management teams of those programmes regularly as well. But I think, looking at what's transpiring before my very eyes in terms of creating those unitaries on day one and the way that my colleague directors are working with their colleagues in the North and the West, I can see in practice that those risks are being transferred across and managed in terms of the major services. Children's Trust slightly differently because it's not transferring over. As you said, it's a contract for the supply of services, but certainly in terms of adults in place and the central services, that dialogue is happening as we speak.
Happy with that, John? Any other questions for Duncan on the risk report? We all happy to note that report? Thank you very much. So the final item for today is the action tracker report and the various action trackers. Now, as usual, you're very open with us and you give us all of the action trackers for all of the major things, which I think is really useful. I think as far as today is concerned, maybe when you introduce this item, Duncan, probably best to focus on the internal audit outstanding actions and how you feel they're progressing and being handed over.
Thank you, Chair. I wasn't going to provide too much introduction on this item, actually, because the level of detail in it, I think, speaks for itself. I think, just to go back to the earlier question, I think this document is presented to you very much to give you assurance as an audit committee that all of the agreed actions, all of the improvement programs that the county has been progressing that are consolidated into the action tracker, regularly reviewed by NLT, have designated owners attached to them, of course, may not always be successfully implemented by the original date, etc. That all of this detail is a really good reassurance to you, and it certainly is to me as the auditor, that those actions are not lost as part of the close down process. Currently we revisit some of these and we cross them off only when we're satisfied those actions have been implemented. And if they're not implemented, they stay on the list. And this is a key set of documents that will go forward to the new unitaries, so that again, that information and those intentions are not lost within it. The only caveat around it is, of course, the new unitaries will then take a view on whether those outstanding issues still remain something that they want to see progressed. They might want to revisit those issues. And I am talking to my colleagues across the boroughs and districts to ensure a similar series of outstanding issues, if only from an audit perspective, are visible to the new unitaries as at March the 31st. So whilst not all these actions are going to be done and implemented by the end of the year, this is, again, a significant document issued to you to show that there is a lot of attention and a lot of detail that we are not just going to lose within a handover process. This is part of the carry forward data that goes across to the unitaries. we are approaching a period where if they've not done by now, they're probably not going to be fully achieved by the end of March. And that's just the reality of some of these things, particularly within a second lockdown period, applying January and February of this year. But again, I can't say the word reassurance enough, that this should give the committee reassurance that all of these issues are not lost. And certainly I am recommending into the 151s, the new unitaries, that this is a key process that their audit committees put on their work programme to ensure that they get similar oversight of all of those improvement actions and can be assured that those improvements are actually being made. So it's, again, it should give you the comfort that all of those issues, if they're not done by the end of March, they are being handed across and they're not disappearing or invisible to the new unitaries. Thank you, Chair.
Any comments or questions on this particular report? Good. I think on this particular one, it's worth remembering where we came from on this, because we introduced this because actions weren't routinely being followed up. And I seem to remember that the first time we saw this, it was yards and yards long. Now, although we've got many more action plans that we can look at, the one specifically related to internal audit is much shorter. And you know, items are being dealt with. So I think that's credit to internal audit and also to management, because it's quite clear that management have responded to this in an entirely appropriate way. So well done to all of you for that. So we have a slightly extended recommendation here. So the recommendation is that the committee note the progress on the implementation of the audit actions and actions arising from the various external inspections and reviews. We're all happy to agree with that? Good, so we'll take that. Oh, Cecile, you...
No, but also I think it's good to note that a lot of work was done, and for the next audit committee that we carry on the same format. It's what you said, but maybe add something on the recommendation that we should carry on with the same format, if that is possible.
Well, I'm sure we can minute that as a suggestion from you if we don't change you know, the actual recommendation, so we can minute it in that way. I'd be very happy if audit committees did follow this process, because actually I think it's worked. Good, so that brings us to the end of our agenda. So our next meeting, I think, is on the 18th of March. Look forward to that. And for the time being, we can declare this meeting closed. Thank you very much.
Thank you.